I think you will have your slice ready, sir. Okay. And you want to bring the
Good afternoon, everyone. Can you hear me okay? Yes. Alright. Nice to meet you all. And we're going to be talking about building wealth, tips to financial freedom. Just a bit about myself. I'm a father, married with 3 kids. I own a business, accountancy practice, and I've been doing that for over 20 years. I'm an investor. I have interest in property and the financial markets, and I like to play tennis, and I enjoy cycling as well. So I'm going to go through a couple of slides, and if you have questions, please write down your questions or note your questions at the end of the slide. We'll go through your questions. And if you cannot hear me, just let me know so I can try and raise my voice a bit more. Alright, so I want to talk about financial freedom. What does it mean? Who wants to tell us what financial freedom means, or what you think it means? Anyone?
I think freedom means it could mean different things to different people at different stages of life. Depending on how free we can move money around. Mean freedom, we have access to money to spend, to invest, to do whatever we want with money. Could be a freedom, and when we don't have it, it will mean we are not free.
Right. Anyone else want to try and tell us what? Okay.
To be able to afford whatever you want, investment, whatever you afford.
Okay. Anyone else want to try?
It also means having access to a level of freedom financially without having to work for it. You already have your money somewhere or your investments working for you. I mean, the returns of those investments is able to take care of your day-to-day life, and also able to take care of your enjoyment and your bills and all that legitimate responsibilities that you have.
Okay. So as you can see, being financially free or financial freedom, it can mean different things to different people. And to some people, financial freedom can mean having £1 million in their bank account, and they spend that for the rest of their life. For some people, it's having a job that pays them £500,000 per annum. They can pay for it, they can buy their phone, they can buy their food, they don't need to borrow. It can mean different things to different people. So there's not just one definition. At the end of bottom line, being able to have financial resources to meet your need will make you financially free. So the more money you can keep, invest and grow, the more you would be able to achieve financial freedom. And I heard Pastor say earlier that the more money you have, the more your expenses grow, which is what I was saying, that disposable income. So the money you have to save, the money you have after all your expenses is reduced now, such that you have little to save, if you want to save money nowadays, it has to be intentional. You have to make conscious effort to save money. So if you have plenty money, right? Money makes the world go around. You can buy what you want, you can travel, you can give your kids as much money as you want. Having financial resources can help you achieve your goals and live the life that you want. Just as an example, yesterday we decided as a family to order Nando's for dinner. When we were eating the food, I was thinking of the cost of that. What we ordered, it cost about £60 for the Nando's. But if I went to Tesco to buy the same chicken, I'll buy that chicken for maybe £10 or £15, then cook it. It wouldn't cost up to £60, right? But that's something that we do occasionally, okay? But I just give an example as an example of you choosing to do something that you don't normally do because you want to reward yourself, you want to pay yourself, and when you earn money, it's good for you to reward yourself. So being financially free, you're able to do those things that you want to do without having to sleep and think and have a headache on where the money is going to come from. It's easy to make it. You work. How many of us are employed? How many own businesses? All right. So if you're employed, you work at least as a minimum 7.5 hours a day to get paid. Right? That's a long time you work. But by the time you get to Tesco, how long does it take you to tap and spend? Seconds, minutes. Yeah? If you're running a business, it's tough getting money from customers. But by the time you start paying your bills, the money just zaps, just goes. So it's a lot of hard work to make money, but then to spend it is so easy. And saving and making the money and growing your money is something. It's an intentional effort. You have to be intentional about it. Alright, so that was just to cover financial freedom and emphasize that it means different things to different people. Alright, so let's do a fact check. Alright. So building wealth is a fast process and you need that lucky break. Who believes that? True or false? False. False. Why is it false?
It takes time to build substantive wealth.
Yeah? Okay, so that's false.
The word building itself is a process.
Yeah.
Yeah. So
Alright, so building wealth, making money is not a fast process. It's not you don't get rich quickly. You have to build it. Building wealth, you master basic, simple principles, right? So you learn, you invest in yourself, you consistently do those things that will multiply your income, your wealth. So as an example, you save regularly over a period of time. By the time you save for a period of time, that becomes massive. And I was listening to a podcast on my way here, and the person I was listening to was saying that a 25-year-old individual that puts away £400 a month now, by the time they are 65, they will have about £1.6 million. Yeah? So consistent habits. Put money away gradually. Saving money is not about having £20,000 and then putting that away. No. You take little amounts and put it aside. diligence and focus. You have to be intentional, you have to be focused, you have to be diligent, you have to be disciplined in whatever you're doing. If you're working full-time, employed, if you're in business, whatever you're doing, you need to be diligent. One question I was going to ask is, if you are in a 9-to-5 job, can you become wealthy from that? Someone said no, someone said yes.
Well, it depends.
Depends on what?
It depends on what you do with the money that you get from there. But then you have people in 9 to 5 in top organizations that have access to buy shares, to buy some equity in the company. So in such a situation, who may come.
Alright, so there is no correct answer to that question. And I'll give you examples. So I mean, I am an accountant, so I work with people. And I have a client who is an employee of Microsoft. This client earns £500,000 per annum. That is their salary. Okay, that's what they earn as income. He's married. He doesn't have kids. Okay, and that's where he lives at. I believe in his own definition. I believe he is financially free because he has his house. He's earning a lot of money, and every year he earns that. So every year he can save that, invest on that, and that way he can build his own wealth. So yes, it's possible to become wealthy on the 95. I have someone else where their income is £40,000 per annum, but then they don't have any money to put aside. That example of someone earning lower, they cannot become wealthy from the 9 to 5. Okay? So whatever it is you do, you have to make sure you're diligent and focused. How much you keep and invest is what builds true wealth. Okay, so when you have funds and money and you're spending, it's not it doesn't make it easy to build wealth that way. A couple of weeks ago, I went into one of my spending accounts for daily groceries alone because I'm a member of. Do you have Costco in Portsmouth? Who knows Costco? Alright, so I buy most of my things from Costco, and I went to my Costco account, and in 1 month I saw that I'd gone to Costco 5 times in that month. Right? Which means money was just going out. So more money going out means you're going to have less savings, less funds to invest. So how much you keep and invest builds the wealth. If you're able to keep money and invest the money, then you'll be able to invest and save more. I'm just going to talk about a couple of what I call money traps. Money traps, things that take money away from you very easily. Of course, top of the list of my list is limited source of income. So when you have just one source of income, that limits the amount of money you have. If your job is not paying you well enough, if your business is not bringing in enough revenue to cover your costs, your expenses, that's limited source of income. Debt, high interest debt. Who has a credit card? Almost, okay. Who has a mortgage? Who has a car finance? Alright, so we all have some form of debt, right? Who does not have a credit card? Who does not have a credit card? You don't have. Why don't you have? You have. Alright, so we all have a form of debt, okay? Some debts are good, some are destructive, some are beneficial, okay? So debt, high interest debt, these are money traps because when you borrow money, you pay interest on that money. If you don't pay it back, it costs you a lot more, particularly credit card debt, okay? Lifestyle. you are earning, your annual income is £30,000, but you're driving a car that costs you £100,000 per year. Your lifestyle, right? No emergency funds. You don't have any backup funds at all. So if anything happens like that, maybe your boiler in the house breaks up, you don't have excess funds to fix that. These are get rich quick schemes. You invest invest £1,000 here, and you get £2,000 in 2 weeks. How many have done that before? Not budgeting, not planning, okay, not knowing how much money you have, not knowing how much money is going out of your account, not having financial knowledge, not understanding basic financial principles, and not planning for the future. These are all money traps that we all have to overcome. Okay, I'm just going to do a quick fact check again. If you have a high income, then you are going to be wealthy. Is that true or false? False. Anyone tell us why that is false? Why that is false? Yeah. Okay, but if you have more money and you are putting money aside, over time.
But the fact that you have more money.
So it's false. The fact that you have high income, not money, does not mean that you're going to become wealthy. You need to take steps to make sure that you manage your money to build wealth. So I'm going to go through some basic principles towards building wealth in the long term. And as we have established, building wealth is not instant, okay? It's a lifetime, it's a long-term, lifetime process, consistent habits, diligence, focus, do the same thing over and over again several times for a long period of time. That way you build wealth. So I'm just going to go through a couple of points on building wealth. Number one is know your numbers. Okay. When you know your numbers, you can make informed decisions. What do I mean by know your number? Your numbers. Know how much money you are making on a regular basis. That can be weekly or monthly. Okay, so if you are employed, that is easy for you to know. If you're employed, you're doing a side business or you're running a business together at the same time, you need to know how much money is coming in. So maybe as an individual, as a family unit, or as a business, you need to know how much money is coming in. Money from your work, money from your investments, money from this side business, anywhere money is coming from. Know how much is coming into your account. And as well as knowing how much money is coming into your account, you also need to know how much is going out of your bank account. Okay? And today, in today's world, a lot of the banks that we use, they send you notifications when money goes to your account, when money goes out to your bank account. I think a couple of weeks ago, I only just cancelled a direct debit to one of these Paramount, this film services. That money was just going out of my bank account every month. I didn't know where it was for, right? How many of you have money like that going out of your bank account? You have no idea what it's for? I'm sure you all do. So you need to understand your expenses. What are you spending on? Your council tax, how much is it costing you? Your electricity bill, how much is it costing you? Some of these bills, if you don't set up a direct debit to pay them, they had additional charges for paying manually or paying late, right? So if you understand your expenses, you would be able to know what is what, which is what you need to cancel, what you need to retain on your account, okay? So when you itemize your income and your expenses, you can compare, okay? Where you have more income coming in than you are spending, then you are going to have a bit of money to save. When you have more money going out than coming in, that's not a good position to be, right? So when you compare your income and expenses, and you have more money going out than coming in, then you need to take action, okay? What can you do? You need to seek promotion, you need to get a new job, you need to start a business, you need to cut down on some expenses, right? And having a budget, okay, is a good place to start. And how many of you have heard of money saving Martin Lewis? Who knows Martin Lewis? Okay, so Martin Lewis does a TV show, I think on BBC, quickly, I don't know, but it talks a lot about money. And then he has a website, moneysavingspark.com. On that website, he has a spreadsheet that you can use. You can use that spreadsheet to itemize your income and compare your expenses. So if you need something like that, you can go to that website and you can download that tool. Alright? So that's just an example of when you summarize your total income. This person, as an example, monthly income 3,100, total expenses 4,500. And this person can see that on a monthly basis they are spending more than is coming in. By simply keeping this data or having this record, you are able to think of what you need to do to move forward or to get out of this situation where you're spending more than is coming into your bank account. I know you can't see the screen there is too small, but what we are showing there is just at the top. That's a monthly profile of how much is coming in, and then in that section, that's a profile of how much is going out, and that is how much going out: rent, mortgage, food, car payment, home insurance, all sorts. If you have this kind of record, if you keep this kind of, when you keep this kind of record on a regular basis, this is a tool that will help you to eliminate expenses that you don't need, because you can see it, and you can plan for it. Okay. When it comes to some of the things that you pay for, always consider renewing these things. Don't let them, when I say renew, don't let them automatically renew, such as maybe your car insurance or your home insurance. If they automatically renew, most likely you're going to be paying more. But if you consciously get quotations like maybe 20 days before it expires, you may get a lower quotation. Right? So don't leave all these things on autopilot. Have a budget, track your finances, and then you have a better understanding of how to manage your shortfalls and how to manage your savings. And this is one key way of how you become financially literate. Okay. All right. So I'm just going to. How many of us are employed on here? Employed. So you work 9 to 5. Okay. So if you are employed, you pay tax, and your tax is deducted at source. Okay. But then what HMRC is doing nowadays is to at the end of every tax year, HMRC automatically reworks your tax and tells you whether you have paid little tax or more tax. So how many of you have received such letters recently where they say you have paid too little tax or you have paid too much tax and they owe you money? Alright, so you have received that kind of letter. Okay. Alright, so some of those letters they are correct, some are not correct. And this is where you need to have information, become literate. Know how much tax you need to pay, okay? So if you're employed or every individual has a tax-free allowance of 12,570, when you earn above that, you start to pay tax. If you stopped working for your employer in between the year, so the tax year starts from April and ends in March. So let's say you left your job in September and you went to a new employer, most likely you may have overpaid tax. Yeah? If you have more than one job, you may have overpaid tax, right? So if you have more than one job, you may underpay tax because they are not using the right tax code for you. The normal tax code is 1257L. Who knows their tax code here? Do you know your tax code? If you know your tax code, let me see your hand. Okay. Not everyone knows their tax code. Making your mission to know your tax code every tax year, okay? The normal tax code is 1257L. If that is not your tax code, you are either overpaying or underpaying tax, okay? So the tax code again is 1257L. If on your payslip your tax code is 1,300, yeah, you are paying less tax, yeah? If your tax code is 1,100, you are paying more tax. So always check your payslip, check that your tax code is correct. I'm just going to show you an example here. So here you've got, that's a sample of the letter I'm talking about. I can see it says that this person, they owe HMRC £675. Yeah? This person, they earned only £3,000 in income. But then HMRC has told them they owe £675 in tax. I know that's not correct, right? Do you know if it's correct or not? If you know your tax code, if you know your numbers, then you will know whether it is correct or not. Now, this person is my client, okay? So from the moment I saw this letter, I know it was not correct. So I contacted the client and told them, call HMRC right away and tell them to explain to you why they say you owe them money. And on that phone call, HMRC told them you don't owe money. Okay? So I'm sure when you receive this kind of letter, the first thing you do is probably to panic. But when you get this kind of communication, do not panic, okay? Pick up the phone and call HMRC and talk about it, right? If you don't want to talk to HMRC, then get the help of a friend or an accountant to help you look at this, yeah? Here's another example. HMRC owes them £6,000. This means that HMRC is going to pay this person £6,000. This is my client, I know this person, I know that's not correct. So when that money hits their bank account, they'll be, and then 2 years or 3 years later, HMRC will realize their error and then put that person in financial problem because they were asking for the money back, right? So when you get it, I'm sure maybe when this person received this letter initially, they were kind of happy, oh, £6,000 coming into my bank account. But that's not correct. So I called them and I told them that this is not correct. So when you receive that money, put it aside and then we sort it out. So if you're employed, make sure that you pay attention to your tax code and communication from HMRC. Now, why has this person received, why have they received this kind of letter? One of the, that's the reason that they have received that kind of letter, because HMRC, according to HMRC systems, they were employed, okay? But then as part of their employment, they had job-related expenses that they had to claim back. And according to HMRC, they had about £22,000 worth of job-related expenses that they have to claim back. For those of you that are employed, can you tell me, do you have expenses to claim back from your job-related employment? Some do. Okay, yeah, some do and some don't. Some do, but I can clearly tell you, categorically tell you, it cannot be up to that amount. It will never be up to that amount. When you do have something to claim back from your job-related expenses, it's usually maybe between 1,500, 2,000 around that to claim back, okay? But never that amount. If you are self-employed, you are running your own business by yourself, most likely it will be around that or more than that, depending on what you do. But if you are employed, your tax is being deducted from your employment. Your employer is responsible to pay for any expenses that relates to you doing your work. Okay? So what has happened is, in the past, this individual, some accountants have helped them to claim false expenses where they get tax refund. That's a scheme that you shouldn't fall for. So if you hear people saying, oh, we can help you to get tax refund from your employment income, be very, very careful of that. So in this person's case, that's what happened here. And that's why HMRC wrote to them that they have money to refund them, which is not right. So know what it is that you are due back, okay? This next slide is just for people that run their own business. If you run your own business, you need to know your numbers, know how much money is coming into the business, know how much money is going out as well. Money on websites, posts, accounting, marketing, and all sorts. Right? So know how much money is going out of your account. Know how much money is coming in to your bank account. Right? So that's number one. Know your numbers. All right. And before we move on to the next slide, just a fact check. All debt is bad for building wealth. True or false? False. Okay. But you know that you have debt that is not good. Yes. Okay. And you have debt that is good. Okay. Credit card should be avoided. False. What? False. But it takes money away from you.
True for someone who is financially literate. I said it's true for someone who is financially literate.
Yeah.
But for someone who is financially literate, it's false.
There are different categories of credit card. There are some that if you are able to pay back on time, maybe before the end of the month, they will give you interest on your usage, you cash it out. So it's just like your normal expenses, and it sets your credit score.
So a credit card can help your credit score. Okay, so it should not be avoided. If you cannot manage it, avoid it. Okay? The way you use a credit card, if you ask me, okay, I would recommend you get a credit card. But that's you need to know how to use it. To use a credit card, okay, go to the supermarket, buy your stuff on your credit card, spend £100 on your credit card, at the end of the month, pay back that £100. Pay back in full every month. That builds your credits. Yeah? That helps you to build your credit. To buy a house, to get a mortgage, you need good credit. Right? So that's how you build your credit. And so I'm not going to say avoid credit card. If you can manage it, by all means use it. If you know that it's going to get you in trouble, if you spend money you don't have, you get in trouble. Okay? Avoid the mortgage because it's a lifetime debt. True or false? False. Why is it false?
I mean, it's false because for
unless you want money to buy a house. But why using your money to buy a house when you can invest that and use bank's money and build do something else with that?
That's a good point. My next one, renting is better than owning your own house.
False.
False. Why is it false?
Owning your own house is better than renting.
But when you own your own house, you get to own your own house through a mortgage. The mortgage is costing you money.
Well, your rent is also costing money. So if instead of paying rent and using the money to pay for the mortgage, and after so many years you can have your own house.
Alright, so it's false on that, okay? If you're currently renting, okay, you need to, I would say, make a plan to move away from renting. When you are renting, you are paying for someone else. Okay? When you get a mortgage, yes, the mortgage can be expensive. You are paying interest on the mortgage, but think about it this way: you are paying for your own. You are paying to own your own home, right? And that home that you have a mortgage on, the value of it is increasing. Okay, so even if you have your mortgage for 35 years or 40 years, the value of your own home, of that house, is increasing. So whilst you are paying the mortgage now, you are indirectly building wealth. Okay, so if you are renting at the moment, make a plan, start working on a plan to see how you can get a mortgage. And getting a mortgage is not something you wake up today and say, oh, I want to get a mortgage tomorrow. No. In this country, if you want to get a mortgage, you need to start planning 2 years before. Okay? So if you want to buy a house now, I would say think of buying your house in 2028 and start planning for that now. Of course, if you have the funds, you can do that right now. But if you don't have access to that fund, you have to make a plan, okay? And speak to a broker, a mortgage broker, speak to an accountant to help you plan how to help you work out steps towards getting a mortgage for yourself. Right, so this takes us to the next point, which is to clean up your finances. So now you know your numbers, you are tracking your numbers, you know what is coming in, you know what is going out, you have a budget, so you can clean up your finances. You need to buy, sorry, who is an iPhone fan here? What's the next iPhone coming out? 18. What? 18. Okay, so do you need to get that iPhone 18 now? No. So you can, if you can avoid it, right? That's if you can delay it, okay, until you have that money. If you have that money, all well and good. But if you don't have it, you need to go into that contract to buy the latest phone now. No, you don't need to. Delay those purchases, those things you are hungry for. Delay it. You need to. You are a family unit. You have 5 children. Do you need to move into a 5-bedroom house? Can you afford to move into a 5-bedroom house now? There's no right answer to that. It's based on you, but you need to determine how can I afford what I want to pay for. Pay off your debts. Credit cards don't pay the minimum payment. Pay.
What about sometimes if you ask something like 150, is it sensible?
Yeah, please note that question. I'm trying to rush through the slide because of time. So please note the question and then we'll just take it on. After I'm trying to rush through the slide. Pay off your debts, pay off your bill on time, cancel tax. If you don't pay your council tax on time, what happens? Not just it goes up, what else happens?
You pay everything at once.
I get letters saying, come to court. That is stress that you don't need. Okay, when you're stressed, you can't focus on managing your money. When you're stressed, you can't focus at work. Avoid those things. Try to avoid those things that will add stress onto you. Okay, so things like your council tax, put it on direct debit, put it on the standing order. Okay, so that when it's time, it just goes and you don't get all those letters. Avoid late payment charges. If it's possible, avoid credit card. Okay, if it's possible. But we have said if you need to build your credit, you need to have a credit card, right? But think properly on that. Buy now, pay later deals. Klarna, who is Klarna here? Anyone using Klarna? Alright, so Klarna is an example of where you buy things and then you pay for it later. Right? Several years ago, when we used to have buy now, pay later with Argos, PC World, I just used to buy things. Buy now, pay later, buy now 12 months. Then when it's 12 months, I need to find £1,000 or £2,000 to pay, plus interest. So if you miss it by one day, you had the interest rate. So if you're meant to pay £1,000, you end up paying 1,500. Right? So you can avoid things like that. If you have who have loans here, do you have loan? Anyone has a loan? No, good. I'm happy to hear that. But if you have so many credit cards and loans, you can consolidate it, right? So you can, if you have good credit, you can consolidate it. Some cards do balance transfer. You transfer a balance from one card to the other to reduce the interest you are paying. So when you know your numbers, you can clean up your finances. Fact check. What do money and water have in common?
The both flows.
Yes. So money, liquid. Water, liquid. It goes away very easily. Okay. So watch how you spend your money. So number 3, become financially literate. We've talked about know your number, clean up your finances, and track your monthly spending. When you track your monthly spending, you know how much is coming out. Divide your income. So if you receive £5,000 a month, think of how you want to divide that. 20% here, 10% there, 10% there. Divide it. How many of you have checked your credit report lately? Do you know what a credit report is? You don't? Oh, okay. You need a credit report if you want to get a mortgage in the future. You need a credit report. Okay, you need to have a credit file. The credit file shows how well you're doing, how you're spending your credit card, whether you're paying your credit card on time, whether you're paying your mortgage on time, anybody you owe. If you have a bank overdraft, whether you're paying out, your credit file tracks all of that. So if you don't review your credit report, be free. Don't be afraid to talk about money. If you're having money issues, look for someone you can confide in and talk about money issues. If you don't want to talk to someone about money, if you don't want to talk to someone you know, go to your Citizens Advice Bureau, right, and talk to someone you don't know about it. But do not shy away from talking about money. Okay? read everything financial. How many of you invest in stocks, crypto, forex? You do. Okay, so before you do that, what knowledge have you attained? What information have you read to make that decision you're making on buying that stock, on investing in that asset you're investing in? What I'm trying to say is get knowledge, okay? Read, learn about what it is you want to do. Why are you investing in that particular asset, okay? One thing I want to talk about is take advantage of free money. When I say take advantage of free money, there are so many cash back schemes. Open a bank account, get £50, or refer a friend, get £100. You have a few schemes like that. When you come across that, take advantage of that. I know who knows Revolut Bank? Revolut has that kind of offer where you refer Revolut Personal, you make a referral, and then they pay you a reward. Revolut Business, the same thing, but then for the business account, you have to pay for that business account on a monthly basis when you open it up. So if you are using that scheme, just be mindful of what's going to cost you to maintain that account. And there are so many banks. There's one scheme that I want to talk about here, which is called Top Cashback. Who have heard of Top Cashback? Now, Top Cashback is a website that you go to, and then you get cashback on what you order. So it's a website. It has a whole load of vendors on that website. So as an example, let's say I want to buy a computer from PC World now. I go to Top Cashback, okay, and then I search for Corey's PC World on that website. Then I click on Corey's PC World. It takes me to Corey's PC World, and then it tracks my purchase on there. So let's say I spend £1,000 on Corey's PC World, then I can get like maybe 1 to 2%, depends on what they're offering. So their offer depends. So Top Cashback, I recommend it. I have made since 2013. I have made £4,000 from that website. Okay, I don't have to pay money. Okay, I don't have to do anything. I just need to sign up to that account and use the links on there. I've not paid money for that, and that £4,000 has gone into my bank account. Okay, so this is not a scheme, it's not a scam. I recommend go to that website and register. You can see there £4,200. That is the money that I have spent myself. I took this screenshot 2 days ago. Okay, I have £260 on that account. And so today, if I say I want to go to Milan, Qatar or something just to enjoy myself, I can just take that money into my bank account and do whatever I want to do with it. Okay? So this is from 2013. This is not £4,000. Is not from last month. It's not from last year. It's from 2013. Over time. Okay? Consistent habits. Do it over time. So I have been building this over time. So take time to go to that website to register. And if you do a lot of online shopping, not all shops are on there. Okay, if you do online shopping a lot, some shops are there. Look for your shop. Look for the link. It will tell you how much percentage you get back when you buy. It goes to the vendor. It takes about 2 to 3 weeks for them to verify your purchase. Once your purchase is verified, they will credit your account, and then that money is available for you to transfer to your bank account. Okay. Moving on. Yeah. So invest in yourself. If you want to be wealthy, you have to be healthy, right? If you don't take care of your health, how are you going to work? Right? Your health is important. Okay, so look after yourself. Invest in your family and relationships. Relationships are the ones that will help you with connections. Do not neglect your family. Your family is important as well. Keep them in loop. Keep them, whatever it is you're doing. If you want to start a business, keep them involved. Get the buy-in of your partner. If you don't have the buy-in of your partner, of your wife, of your spouse, down the line, you may have family issues. and that will create problems for you, and that will be an issue. And that will be an issue with building wealth. So get your family involved. Look at your career choice. Several years when I initially came to this country, by the time I came to this country, most of the jobs that you could do were security jobs, care jobs. Now I'm not dissing those jobs anyway. No, what I'm saying, I am an accountant. I studied accounting. Accounting has always been what I wanted to do. Okay, so if I came here and I'm doing security and I'm doing care, of course I'm not going to be happy. Okay, that's not my career. My career is accounting, and I invested my time and effort into getting accounting jobs, and now I run my own accounting practice. So your career choice, invest in your career. Even if you're not doing what it is you want to do now, continue to invest your time, and over time you will get that, you will make progress in that. If you're currently working, seek training. Don't just wait. If you work, I've worked with people when I used to work for people. When I used to work, I have people that have been in the same job for 30 years, doing exactly the same thing, earning exactly the same income every year. Their income goes up 3% every year, right? They're happy where they are. For me, I'm not happy to do that. Okay, I am someone that I want to start as a finance assistant. I want to become a finance manager. I want to become a finance director, and I want to become a CFO. That's my career goal if I'm employed. Okay, and that should be your goal as well. You should aspire to step up in your employment. So if you need to attend courses and training, try and do that so that you could progress. If your current employer is not giving you that opportunity, then apply for jobs elsewhere. You currently have experience, use the experience to update your CV and get a job elsewhere. If you apply externally, it is most likely that you get a bigger pay rise, yeah, than being promoted within. Okay, and that's how it works. If you seek promotion within, your pay rise will only be little. But if you seek promotion externally, where you apply to other employers, you will most likely increase your income. Aspire for multiple income streams. Don't just stick without your job. Find a side hustle. Start a business. Okay, so you invest in yourself. Alright, so another factor, you need a lot of money to start investing. Funds. Okay, so that's my next topic, investment. Okay, invest. You don't need to have £10,000 to invest. You don't need £1 million to invest. Building wealth, again, as we've said, is mastering basic principles, applying consistent habits. Okay, so when you want to invest, you can invest £10. You can invest £20. Microsoft stock, I think, is around $400. You don't need to have $400 to invest in Microsoft stock. You can invest £10 in Microsoft stock. You can invest £5 in Microsoft stock. You don't need 400. You don't need a lot of money to invest. Okay, so yeah, so consider investments. Before we talk about investments, never use borrowed money to finance your lifestyle. So if you approach a bank for a loan, don't use that loan to go and buy a car that you cannot afford to pay. Okay? Use a loan to invest in a business. 2018, I took out a loan of about £200,000 and I bought a business. Right? And that's part of the business I'm running today. So I took a loan to buy a business that's going to generate income. All that loan is paid off, right? So there are good debts and there are bad debts. Invest whatever money you borrow, make sure that it's invested in something that will give you a higher return. Okay? And if you are borrowing money to go and invest in stock and crypto, be very cautious. Okay, those are high-risk investments. Yeah, when you want to, there are ways you can invest. Investing is not just in stocks and crypto. You can invest by starting a business. You can invest by buying a business. You can invest by investing in an existing business or in a new business. But you need to do your own due diligence. You can invest in property in this country. If you don't have a lot of funds to invest in property, you can come together with people that have funds, pull your funds together and invest in property. Of course, you have the stock, you have the forex, you have the crypto that gives you reward. These are high risk, high reward. The higher the risk, the higher the reward you are seeking. So, can I by show of hands, who is invested in stocks? Do you mind telling us what stock you invested in? Tesla. Okay. For anyone else? Asset Manson. Okay. Why did you choose Tesla?
The world is going electric, so it's a business that has future. So it's time to be growing.
Okay. Which one are you invested in?
Zenith is banking. Zenith banking.
Zenith banking. Why did you choose that?
Yes, banking industry is one of the most durable and time-tested investments.
Okay. So for those, why did you choose that stock? Alright, so for those that have invested in stock, they did not wake up one day and put their money in that stock. Okay? They had reasons. They did their research. They did their due diligence. They had tangible reasons for investing in that stock. So when you want to invest, don't go on Google. Oh, Tesla is going up. I want to put money there. Microsoft is going up. No, have a reason for why you want to invest in that stock. Have a reason for why you want to go into forex or crypto. Overall, when the financial markets are going up, it's not a good time to plunge in, okay, and put all your money in, right? When it's going down, you put your money in little by little, because when it goes down, it will come up, right? Are all stocks and crypto, are they going to go up forever? No, it's always up and down, up and down. When you buy it when it's down, okay, of course, it's going to go further down. Every time I've bought, it has gone down. Okay? When you buy high, it is going to come down, which is why you never buy on the top. When it's gone down, you have a chance, you have a high chance that it's going to go back up. So, monitor whatever it is you want to do in terms of stock and crypto, forex. Make sure you monitor it and not just plunge into it. Do your own due diligence. Only invest money that you can afford to lose or you don't need right now. Okay? One way, and this is something that you do need to get involved in, right? Because that is one way you're going to build your wealth. Investing. Always seek training and additional knowledge. Plan, savings and insurance. Plan for emergencies. Put some money aside regularly for those emergencies. Consider taking relevant insurance. Speak to insurance providers because there are so many insurance out there that may not be beneficial to you. So speak to qualified professionals about the right type of insurance for you. If you're a limited company, there's some insurance you can take to cover you if you're not able to work for a period of time. Again, speak to the right professionals on that. Pension planning. For those employed, how many are contributing to a pension? Who's contributing more than the minimum? Good. All right. So on pension, when you're living and working in the UK, and you want to retire, there's what we call state pension. Who has heard of that? At a certain age, for women and men, so maybe for women at a certain age, and you have to retire, you have to stop working, and the government will start paying you state pension. Okay? Your state pension, what you get paid, is as a result of what you are paid now. Okay? Not the pension being deducted, but the national insurance. On your pay slip, you see income tax, you see national insurance. That national insurance you are paying is going towards your state pension that you get. Okay? So some people, they're going to get what we call the full state pension. Some will get, some get only a little. And that's because they have gaps in their national insurance payment. So if you've been out of job for a few months, there may be a gap in your national insurance payments. If you are self-employed, you work for yourself, you're not paying NI, there will be a gap in your national insurance payment. So you need to go onto gov.uk website and check for gaps in your national insurance contributions, so that I can bring that up, so that when you retire, you get a full state pension. Okay? You can also check your state pension forecast. Go on the gov.uk website. I'll share the link on the next slide. Go on the gov.uk website and check your pension forecast. That will tell you when you're going to start getting your state pension, how much you're going to get, and if there are gaps. Okay. So that's one thing about pension. Make sure that gaps in your NI are filled. So check that out. If you're contributing to a pension, you can consider contributing above what you're contributing at the moment. That saves you tax now and gives you more funds to use in the future. If you're running your business, there are special pension schemes that you can consider contributing to. Speak to your accountant or a financial planner on that. So on the next slide there, you can see that's the link to check for gaps in your national insurance and also to check for gaps in your state pension. Okay, so you are home. How many of us are looking to relocate from the UK? Okay. I mean, even if you relocate from the UK, right, as long as you have worked and they've taken NI from you, you will still benefit from state pension. So whether you stay here or you leave the UK, you will still be entitled to state pension, right? So make sure that your contributions are up to date and there are no gaps. And your private pensions, if you have changed employers several times, most likely you will have pensions scattered all over the place, right? So you can go on gov.uk and look for what we call the pension tracing service. Right? Pension tracing service. Just go on Google, search for pension tracing service, and make sure it is on the gov.uk website, and that will help you to trace and track any pensions that you don't have records for, and then you can bring all that together into one pot so that you know where they are, okay, and you're not losing out on your pension, because these are things that will help you with building your wealth. Alright, so I'm nearing the end of this presentation now. So at the end of the day, whether you are employed or in business, it's always good to make sure that you seek tax advice to make sure you are on the correct tax code. You're not paying too much tax or too little tax. If you're in business, make sure you're seeking tax advice to make sure that you are taking advantage of available tax reliefs and that is available to you. If you are investing and building assets, you are building assets for the future. If you are building assets for the future, you need to plan for how you transfer that asset to your children. Right? If you give your children your assets and you pass away within 7 years, your children will pay 40% tax on that. So you need to plan ahead. Yeah. That's why you need to seek 40%. Right? That's why you need to plan ahead. So if you are building assets, you need to consider putting a will in place. How many of us have thought of that now? To write a will? Nobody. Having a will now is not a bad thing, okay? It doesn't say you're going to pass away. It's a tax planning tool, right? That will help your family and your children avoid paying 40% tax if and when you do pass away, okay? So consider writing your will now. Whatever asset you have, consider that. So whatever it is you want to do, start saving, start building, start learning, start paying off your debt. Just start, okay? Little steps, consistent habits, they go a long way in helping you achieve financial freedom. You are your own learning architect, and financial management and investing, these are lifelong endeavors that you always have to be involved in. Okay, so that's the end of this presentation. If you need to, there will be questions now. If you need to contact me, take a snap that QR code. There's a form there that you can fill. Only fill what's relevant, and then myself, or a member of my team, will get in touch with you. Questions now. You had a question, man. No, so always with a credit card, always pay more than your minimum payment. Always pay more than your minimum payment if you can. That will reduce the amount of interest that you pay. Yes, so if you pay more, if you pay on it, so the question is, on your credit card, should you pay more than your minimum payment? Yes, if you can pay more than your minimum payment, that will reduce the amount of interest that you pay on that card. You can do that. So yes, if you can do that, I would recommend that. And that will help you clear off the balance quicker. Any questions?
Apart from the credit card, is there any other means to build your credit?
Is there
any other means without a credit card? Because I don't like credit card.
Utility bills, right? Anything that creates a debt profile. So a utility bill creates a debt profile. You have to pay them. That goes on your credit file. So having a utility bill, being on the electoral roll, right? Those things build your credit file. Having a bank account with the High Street Bank, making sure that those accounts is not overdrawn. It doesn't go overdrawn, right? Paying your salary monthly. You only build your credit with that bank. So let's say you have an account with Lloyds. If your salary is going to Lloyds every month, you are building your credit with Lloyds. So that will help you to build your credit with Lloyds. Utility bills will help you to build your credit externally. Okay? But I know you don't like credit card. In this country, to build your credit file, you do need to have a credit card. Okay? So if you don't like it, that's fine. But if you have one, it will help you to build your credit a lot faster. Okay? But do you have a mortgage? No. Do you plan to get a mortgage? I would recommend get a credit card. Okay? It's just about discipline. Right? If you spend £100, pay it back. What you can do is, if you're scared of credit card, tell the bank to reduce your limit. Okay? You can have a limit of £200, £500. That will help you to manage it better. Okay, so use it every month and pay it back. You'll build your credit faster that way.
$1257 L code. What is the amount you are likely to pay per annum? Your tax code is not 257. What is the minimum maximum tax you want to pay?
No, that question, I can't give you a straight answer because if you're earning £10,000, what you pay is different to earning £50,000. Yeah. What you can do, there is an HMRC app on your. What phone do you use? There's HMRC has an app. Okay. So download the HMRC app, whether Android or iPhone, sign up, and then it will tell you what you pay. So I can't answer that because someone earning 30K, what you pay is different to someone earning 50K, right? But if you are on 1257L, you should pay the normal tax. So that HMRC calculator will help you better that way. Yeah.
At the end of the year, you get your P60 from the HMRC.
Your employer gives you a P60, not HMRC. Your P60 comes from your employer, not from HMRC. But if you download the HMRC app, it will tell you what you pay on your earnings. So all you need to do is enter how much your monthly earnings are, and then it will tell you how much tax you pay. Yeah.
How do you go in accounting if you have sponsorship that has to do with care?
So I can't get
If you're on the sponsorship that has to do with care, and you've got some accounting background, how do you go?
I'm sorry, I can't answer that. That's a legal question, I believe, not an accounting one.
That's why he said it's illegal.
From that last year, when I'm
Maybe they did not deduct the correct amount of tax in previous years. So when that's the case, they bring that tax forward and deduct it from their current earnings.
We should be rounding up. We should be closing from all of these seminars.
Then they just take
Thank you for the session.